Hi guys, and welcome to an educational video on candlesticks. This is going to be an unconventional video on candlesticks. It's not going to be your sort of standard it's standard candlestick patterns or discussions on candlesticks or anything like that. I'm going to show you basically what it is that I look for, okay, in candlesticks. It's not a pattern. I don't believe in patterns. I don't believe in, a series of candlesticks make up a particular pattern, and then because of that, I'm going to go and put my money into the marketplace. Really think about what I'm about to say. Let's say that you are learning to trade and you've managed to save up a couple of £1,000 or a couple of $1,000, okay? And you open up a trading account, and during your studies you found that there are candlestick patterns that you look for. You've done a little bit of back testing, and then you feel comfortable enough to spot that particular pattern, and then you're happy. Once you see it, you put money into the marketplace, you follow some good risk management rules, and then off you go. My issue with that is this. The reason I don't like patterns is because they don't represent what's actually happening inside the candle itself. Okay, and what I mean by that is, you could look at a cluster of candles and say, well, there was a turning point here, why? And you kind of look at the candles and you say, well, this particular candle did that, the next candle did this, and then the following candle did that. So because of those 3 candles or 4 candles, doing X, X, and X, I'm going to go and throw myself, into the marketplace. I'm going to use, some of my hard-earned, hard-saved, or whatever you want to call it, some of my hard-earned money into the marketplace. I want to actually know what's going off inside the candle. Okay, there's many ways that you can say that. Some people, and I've heard this said many times over the years, you have to be able to see the orders inside the candles, or you have to be able to see, the pricing inside the candles. You've got to see where smart money's, doing their work, where the market makers are doing their work, and so on and so forth. I've even heard people say, many years ago, I had an old DVD. I won't say from where because I don't want to talk about other companies, but it was back in the 90s. There was a particular video that I bought on guerrilla trading tactics, and one of the terms that was used is to see the psychology inside the candlesticks, so the fear and the greed, which I did like, to be honest. I actually did like that analogy. But what I'm about to show you is pressure, really. I suppose that's a good way of saying it. It's the pressure inside the candle itself, or rejection, which is another term, to say it. So this is not going to be, we're going to show you a bunch of patterns and a bunch of entry patterns, and that's, because that's just going to get you into trouble. You need to understand, number one, the big picture, the context. Why is the candle doing what it's doing? Okay, and what does that represent? And then having seen that, is it showing enough for me to jump, into the market and put my money, on a trade? So just a really quick overview. I'm representing the candles here as green for up and red for down, okay? And on an up candle or an up candlestick, you will see the open is at the bottom. So this is the body of the candlestick, and then these are the tails or the wicks, okay? So price opens, comes down first, goes back up to the open, continues going up to the high, down, and then the close. The reason that this leaves a tail behind, and a tail behind or a wick behind, is because at one point, when the market opened, or the candlestick opened, it went down first, which means all of this was green, and then as it starts to go back up, it leaves where the low of the day is to represent or show you the low of the day was here, okay? But from the low of the day, that's the lowest point. It carried on going higher, higher, created a high of the day, so that was the highest point of the day, and then it closed here. So it's an open, high, low, close. And it's the same with the down candle, but in reverse. Okay, the highs and the lows will be the same, but the open and the close are reversed. The open is here. We went higher, created the high of the day, or the high of the candle, sorry. The high of the candle. Starts to move away, leaves the wick behind, fills the body. Okay, keeps going lower, creates the low, comes back up, and then closes. All right. So this is a basic candlestick. The next slide that I'm going to show you is the following. Now, see what happened there. Okay, the candle was like this, and now we have half a body. So what's actually happening? Okay, in its very basic form, as the candle is like this, okay, the market opens here, it goes higher. It creates the high of the day, okay? Well, sorry, the market opens here. It goes lower first, then it goes higher, creates the high of the day, and then as it starts to come down, okay, and close, that's just a normal candle. But on the next slide, it continues going and closes lower. So really think about what's happening. Yes, this is a bullish candle. It's an up candle. It's an up close candle. But does that necessarily mean that it's bullish? Not necessarily. Let's say that this candle is in the context of a swing point. So you have a candle here, which is there. Then the next candle opens this one, does a high, closes midpoint. Okay, so it's reversed, it's pushing lower. And then the next candle opens here and then continues to go lower. All right, so you have one candle, a higher candle, and then a lower candle. That is showing that price was going up, up, some decent rejection, and then the next candle is lower. Okay, that may very well tell you something, but that's not what I'm trying to get at. That's just an example. What I'm really trying to get you to understand is that this push back is a deeper push back into what was a full candle at one point. So as it's starting to go lower, this is stronger than this because price closed up here. Okay. In our next slide, price closed down here. So at one point it was here, and now it's ended up sort of midpoint on the close. That's showing me that there's downward pressure. That the market was going higher, 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 but then for whatever reason, and that's the context side of things, it started to push lower, 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 and it closed here. And it's the same for the bearish candle, which in actual fact is not necessarily bearish in this example. You can see that it was lower at one point, okay, here, but watch the red candle, it's pushed higher. So it came lower, 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 but then for whatever reason, and again context, which we'll go into, it decided to push higher, push higher, push higher, and it closed higher at a higher price. Okay, so there's pressure upwards, and then in the green candle, there's pressure downwards. Now let's go to the next slide, and you'll see this a bit more pronounced. The next slide is showing a much more pronounced version of. Now what I'm going to do, I'll show you this way. I'm going to go for the first slide. Okay, so let's say you're looking at a candle, a bullish candle like this, and that's how it looks at the moment. And then by the time that candle closes, so let's say it's an hourly candle. Okay, so 60 minutes have gone by, and it ends up like this on the close. What is that showing you? What is that telling you? It's showing you that the price of the candle, or the candle itself was, up here, but then it's pushing lower, 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 and it's ended up closing almost where it opened. Okay. And that can tell you a lot, guys. That can tell you a lot. But again, context is very important. So price was a lot higher at one point, and it's ended up coming all the way back to almost where it opened. That could be a stop run. That could be, a reversal. That could be indecision in the marketplace. There's so many ways to look at it. But visually, it was higher, and it closed almost where it opened. And it's the same with the up candle. Okay, or sorry, it's the same with the down candle, the bearish candle, which has ended up being all the way down here. Let's say that there's a stop. Let's say that there's a price here, and it's come all the way through it, taken out the stops below the marketplace, and then reversed and gone all the way back up to almost where it opened. Okay, that tells you something. All right. So now that you've got that in your head, I'm going to go to the questions, or the context side of things, okay? And there's a few points I want to go over. The first one is you need to understand the story behind what price is doing, the reason it is moving from one price point to the next, okay? It's not enough to just look at candles, like I said, and say, well, it was higher and then it reversed all the way and it actually ended up being a bearish candle, so now I'm just going to short it, okay? There has to be context behind what you're doing, right? And that's really, really important. It's not enough to just take a few candles and say a pair is bullish or bearish. It's not, okay? There is a lot that you need to understand, okay, the ebb and flow of the market, what's going on with, for example, if you're trading the Euro USD, you need to know what's going on with the dollar index, right? And you need to know what's going on with some of the Euro pairs. Is the Euro currency stronger or weaker as a whole in the basket of currencies? And there's so many things, so many things. Context, the story behind what leads to that candle. What are those candlesticks telling you within the context of what you're looking at? There are many patterns that traders look for, but patterns do not move price. No, they don't. Patterns are just a representation of what has already happened. Okay, so you've got to remember that. Don't focus on the pattern. Focus on what's actually happening in price action. Okay, some people use indicators to indicate that. That's fine, whatever. Some people use the news. Some people use candlesticks with indicators. The point I'm trying to make is the pattern itself is just a visual aid that's telling you what's actually happened previously up to that point. Okay, and then when you understand the storyline and the big picture, it's like an eye-accessing cue. It's not an eye-accessing cue. Sorry, that's neurolinguistic programming. It's an eye cue. You look at it and you say, I've seen this before. And the last time this happened, there was a stop run. The candle formed this way. It's retracing. This may be a good buy. I've seen this before. And then you start to study. You start to take notes. Snapshots and so on, and really go into this. Okay. If you truly understand why price is moving to a price level, you won't need a pattern to trade. Okay. Now this is if you could understand what it is that I've just said, okay, and really grasp what I've just said, I'm telling you, it will change your trading. If you truly understand why price is moving to a price level, you won't need a pattern to trade. Think about that. If you know why price is going where it's going, okay, you don't need a pattern to tell you the pattern's there, now price is about to do this, and that's why I'm going to get in, okay? That's a probability trade, and I know we're trading on probabilities, yes, but there has to be an understanding of why price is moving. If you know why price is moving, then you know why it's going where it's going. You don't need a pattern to tell you that. You understand the market. Understanding the market is absolutely key to understanding when and when not to get into a trade. Just as, why would you open a trade 2 days before Christmas? When you know that the liquidity is very thin, you know that most people have stopped trading, and you know that you're probably going to get yourself into trouble because the broker's going to be kicking your ass. Why would you do that? Candlesticks and patterns have absolutely nothing to do with that. It's logic, it's common sense. Don't open trades at holidays because you know that the market's going to be that way. Just as if you truly understand why price is moving, you'll know where it's going. And if you know where price is going, you just need a cue in the respect of a candlestick, like candlestick ideas. Price action ideas in the respect of I know where price was, and I know that it has to go there because, and then fill in the blank. You know it has to go there. Why does price have to go there? Because there's nowhere else for price to go. If you understand that, I know it sounds like, well, hang on a second, why aren't you a billionaire? Just put that to one side for a second, because you could have the keys to the kingdom and you could still screw it up because your psychology gets in the way. Understand price. Know why price is moving. If you know why price is moving, you know it will go to that level. So the story is what matters, not the pattern or indicator. Right? And we've said this over and over again. Absolutely, the storyline, context. When you're studying price, focus your attention on the way price behaves during specific times of the day. This is very important, okay? Because again, if you take a price pattern and you say, well, I like this pattern, I've traded it before and I know it works, okay? Fine. Trade that price pattern, and this goes on to the next point, the London session, New York session, and Asian session, okay? Trade that exact pattern in the London session, the New York session, and the Asian session, and you see that your results will be very skewed across all three sessions, right? Knowing when to trade and when not to trade is very important, okay? And in between those sessions, it's very quiet time, okay? For me personally, I prefer to trade during the London session, okay? The London session for me, it's the most volatile. It's the most it's the session where there's the most volume, and I know that I'm going to get the movement that I want, okay? It is tricky, but for me, it works for me. The New York session is a bit more placid. Still plenty of volume, still plenty of volatility, but a bit more fluid. Okay, and you'll find that you'll probably get less into trouble, right, trading the New York session than you would the London session. The Asian session for me, I'm in the UK, so the Asian session for me is like, early hours of the morning. Not really a time that I want to be trading, and it's quite slow unless there's going to be some a news event that's coming out from, for example, maybe for the Japanese yen or the Aussie dollar. It's just not really for me, to be honest, the Asian session. But the Asian session is very, 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 very important when it comes to trading the London session and the New York session. Okay, but that's all proprietary stuff, so I'm not going to go into that. Now, let me just show you something. This is a daily chart of the Euro USD, and as you can see, I've marked out some of these candles that we were looking at previously. Okay, so just to give you an idea, this one and this one. Okay, so let's go back, and you can see tails, 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 tails. Now, let's just focus our attention on this one here. All right, so price was higher, all right, and then it rejected all of that candle and closed there. Why didn't it continue going lower? Okay, why didn't it continue going lower? Instead, it came down a little bit more, and then it ended up going all the way up, breaking the actual candle's high and then continuing higher. Because there's a context behind this, this candle. This is nothing more than just price going higher and then price going lower, while it's waiting to continue going higher and continue its trend higher. There's a reason that this is doing what it's doing. You can't just take this one candle and go, yep, it reversed, I'm all in. You know what I mean? Don't do that. You have to really understand price action and why these candles are forming the way that they're forming. If you look at these two examples here, you can see price is coming down, it goes back up. Price comes down, it goes back up. Price comes down, it goes back up. Then price comes down again, it goes back up. Price comes down again, it goes back up. And price comes down again, it goes back up. But eventually it continues going higher. Okay, what's actually happening here? Like, think about it, guys. Really, really think what's actually happening there. Is it possible that price is coming down, okay, to pick up more orders? Yeah. So price comes down, market makers get a better price. Price comes down, market makers get a better price. Price comes down, market makers get a better price. And they're accumulating their long position. Accumulation, accumulation, accumulation. Breaks out, distribution. They start to offload that position. Okay? Comes down, then they have to offload some more. Comes down, have to offload some more. Okay? But the point I'm trying to make is you can't just take this one candle and say, well, I'm gonna short. Take this one candle, I'm going to short, or take this one candle and I'm going to short. Because remember, and this is something that we'll always point out, while this particular candle here, for example, is forming or has formed and then it closes, remember, we don't know all of this has happened yet. Just like we didn't know all of this has happened yet while we're waiting on this one, or this one, we didn't know this has happened. You're dealing with that candle in that moment. Yeah, right now it's easy to just look at all of this and say, well, look, there was all this happened, then it went higher. This happened, and then it went lower. That's easy to do. Yeah, you have to understand that in that moment, the chart will not look the way that it looks right now. It's going to look completely different. Okay, so bear that in mind. Very, very important. Bear that in mind, because I'm not going to be one of these people that's doing videos and showing some of the stuff that I know, and then only ever showing examples like this and going, well, did you see this happened and then that happened and this happened? I can't stand all of that stuff. It drives me crazy. Yeah. Next one, you can see I'm going to be a little bit more in depth on this one, and I'm going to try and help you to understand the context, the actual context part of what I'm talking about, the storyline. Okay, so price comes down, okay, and then we end up having a low form here, a little bit of rejection, comes higher, and then comes down again, breaks the low. Get a nice rejection bar, and then it continues going higher, okay? And they get a nice push higher. This whole area here is actually telling you something, okay? Forget the candlesticks themselves for a second. It's actually telling you something. This whole block of price action is telling you something. We had a move down, okay? Comes back up. Not crazy retracement, but has a nice little sort of mini rally. Comes down again, breaks the low, comes down, and then eventually it goes all the way high, and we get this really nice strong bar. So let's imagine, right, that we're looking at price, and let me see if I can actually do this. Give me 1 second, guys. I might be able to show you something. Yeah, let me do this. let's edit the mask. There we go. So let's get to this point here. Okay, let me just close that off for a second, right? This is what you would see at the time. Okay, not what we've seen before. This is what you would see at the time. So really look at what's actually happening. Let's say you're sitting at the chart right now, right? And this is exactly what you're looking at. And you look at this bar and you say, well, look, there's a candlestick right there and there's some really good rejection there. I'm going to short it. Okay? That's how traders get into trouble, because they add too much weight to the actual patterns, candlesticks, bars, indicators, lines, all of this stuff. They add too much weight to that stuff without actually understanding the context behind why. For me personally, when I sat down when I first saw this, because I remember I monitor the euro every single day. When it closes, I take a look at the price. So I saw this. I know what I'm talking about, and you can see all the previous videos that that I've personally done when I've discussed the euro USD, what I expected and where prices has ended up. So I'm not just talking out of my arse, so to speak, right? Look at what's happened. Price came down again, breaks the low here on this candle, goes higher, really nice strong push up, and then this is just normal price action. So why would I short that? If anything, I'd be looking at either staying neutral and waiting for to see more price action, or I'd be looking for a pullback to get long, right? Because the context is still bullish, all right? The context is bullish. So you want to be looking for these rejections or pressure within the market that you're trading, based on an overall picture of a bullish or a bearish bias. You arrive at that bias by actually looking at what price is doing. Look at what price is doing. Don't just look at the candles and say, well, this is a pattern and I'm going to do that because that represents a bearish or a bullish move. Don't do that. Actually look at the candles, what they represent, and start to piece together where price should be going based on that picture, that story. Okay? So let me just re-edit the mask. So if we go to edit mask, there we go. All right. So I hope that you understand where I'm coming from, and I hope that you understand, it would have been easy for me to sit down and just show this, candlestick patterns. There's loads, man. There's absolutely loads. I could have shown loads of stuff and thrown you all into the deep end, and people end up, taking these price patterns and going long and going short based on, these ideas, and it just doesn't work, And the times that it does work, they're not enough for me personally. I want to know price is going here because it did this, this, and this first. And the only reason it would have done those things was because it was bullish. Yeah? Or because they're accumulating, they are buying. That's the only reason it would have done that. In this example, I'm not selling here. Why? Because the reason that we arrived at this point here is because it came lower, rejected, nice strong bar, and there's room, these three highs here, for price to go higher, and clear these highs. There's a reason for it, okay? So I have to arrive at that first, and then I will look for pressure. Where's the pressure? Where's the rejection? Where's the turning point? Yeah, is it a continuation? Do you understand? So all of these things will piece together as we continue our education together, and I really hope that what I've just discussed with the candlesticks and in this particular educational video, helps in some way. That it opens your mind or your eyes to a different way of seeing price. It doesn't mean, please understand, it doesn't mean what I'm saying is that you have to do what I'm doing or do, throw what's working for you out the window, or get rid of your indicators, or get rid of the news, or get rid of the resources that you use. Don't do any of that stuff. Don't ever let me tell you not to do that stuff. It's nothing to do with me. All I know is that if you understand the storyline, then the indicator can help time the entry. I personally don't use indicators at all. Nothing. Zero. All right. I almost never have my entire 20 years of trading. But some people do. Some people like them. I don't want to say anything about it. It's nothing to do with me. All I know is that if you understand the story, the indicator can help with the timing. The news can help with the timing. Okay? And so on and so on. So I hope you found this educational, guys. As always, please give us your feedback. We always take feedback seriously. Anything that you say, we take on board, whether it's positive or negative. And if anything, I prefer people to say, look, man, the education was okay, but you could have improved here, here, and here, or can we see a bit more of this, or can we see a bit more of that? And that helps me make better videos, better education for you, and everybody wins. All right, guys, and don't take things personally. This is about you guys. It's not about me. So I hope you found it educational, and I wish you all the best, and we'll see you in the next episode. Take care.